Elon Musk dropped a bombshell in the past 12 hours that has Wall Street taking notice. John Eltridge, man, on X, he shares this, that the expected profit growth in the next 5 years for your mega cap companies has Tesla at the highest at 258%. This is based on analyst estimates already. So as is, in the current state of Tesla, analysts are expecting 258% profit growth in the next 5 years. The current expected EPS this year is $2.56, times that by about 2.5, and you're looking at $6.40 of potential profits that Wall Street is expecting, times that by 100 times multiple, that's $640. Respectable return from where Tesla is today, around $290 and some change. No. Elon Musk says, forget that. It will require, quote unquote, outstanding execution, which I think is Tesla's bread and butter. But I think it's more like 1,000% gain for Tesla in 5 years that is possible. And really based on that same calculation, a 1,000% gain from current EPS targets of $2.56 for 2025 would be $25.60 of EPS in 5 years, times that by roughly 100 times multiple. Considering 5 years from now, the growth rates are probably going to massively be accelerating, even after 1,000% rise in profitability. By this point, Optimus is really going to be going mainstream. You're going to be looking at Tesla stock around $2,560 per share, again, with almost flawless execution, which, yes, this does roughly translate into a 1,000% gain from Tesla's current share price. But honestly, I think Tesla is probably going to exceed that within 5 years from now. By then, robotaxi should be scaled, hopefully to all of the US, good chunks of Europe, good chunks of China, and maybe even other countries by then. And that should have a very nice margin attached to it. And then you're going to have the Optimus that is really starting to go gangbusters at that point as well. It wouldn't surprise me if Tesla's profitability EPS was 1,500 or 2,000% better than it is today 5 years from now. And personally, to me, that's why I'm so attracted to Tesla, is because you're not going to get anywhere close to the returns in any of your other big tech stocks. And really, to get a 1,000%, 2,000, 3,000% long-term return, you have to take a considerable amount of risk. And that's just not attractive, especially in this marketplace. Buying Tesla, there is essentially a 0% chance Tesla goes bankrupt. Like, something would have to utterly go wrong for that to happen. And companies go bankrupt usually not because the product is bad or because it stops being successful, but usually it's management. Usually it's bad decisions, bad strategies, and you don't have that issue at Tesla. And whether you are 20 or you are 65, Tesla can work into a portfolio and be that alpha that will outperform over time. Again, as long as robotaxi is successful, which it looks highly likely that it will be, and then Optimus eventually gets figured out to be mainstream, which looks pretty certain as well at this point. Again, bottom line here, you have to take a lot of risk in speculative companies to set yourself up for a 10x, 20, 30x return ever. Like, whether it's 5, 10 years, however long your time horizon is. With Tesla, I deem that risk a lot lower, with similar upside returns as moonshot small caps or low market cap companies. And especially as Tesla has fallen over 40% from all-time highs, there is very attractive reasons to own Tesla right now. And that is why I've been buying Tesla stock. Now, keep in mind, I'm not going to trick you here. I do think Friday's rally was kind of like a bear market rally. We didn't rally on good news, we rallied on bad news. And it looks like a way for Wall Street to exit some positions. You see this during bear markets, like in 2022, where you get aggressive rallies. It's short coverings, right? There was a lot of people that were short heading into Friday. These shorts got exhausted and they short term started covering on short positions, and they are going to start unloading some of those long positions. Because there is so many risks out there, there is a growing risk of a recession. And that is ultimately like the worst case scenario for Tesla. I think we ultimately avoid a recession. But just like 2022, as recession odds rise, that puts pressure on stocks. And that's why simply I think Friday was a quote unquote bear market rally. It's kind of the best way to describe it if you were invested in markets in 2022. And I do think we could bounce a little bit further from here, especially in stocks like Tesla that fell over 40% from all-time highs. There was no logical reason why Tesla fell that much. There was a lot of fear-mongering, a lot of misinformation that will shortly be proved inaccurate. I mean, let's just, again, put this out there for anyone that does not understand this. You remember a couple days ago, a week or two ago, all the scary headlines about Tesla sales declining 45% in Europe? Well, you went from 18,000 deliveries of the Model Y in January of 2025, or just for Tesla's models, all of them, in Europe, 18,000 in January 2024, to January 2025, 8,000 deliveries in Europe in 2025, in January. So year over year, yeah, you're down 45%, but you're only talking about 9,000 vehicles here. When the Model Y is virtually not selling at all, that's actually really good. I mean, look at the data out of China. Model 3 selling just fine. Like, that hasn't slowed down at all. It looks pretty good. But there's like 0 deliveries for the Model Y. So the numbers we're actually getting now look very good in that context. And over the coming weeks, as Tesla is now starting to deliver the Model Y in China and will be delivering the Model Y in Europe as well, you're going to see those delivery numbers explode. I mean, there's no other way to put it. So if Tesla truly follows the quote-unquote fundamentals, well, we dropped 40% on scary headlines that were really misinformation. People are going to wake up and say, oh my gosh, Tesla's accelerating. The fears we had were irrelevant. That's great for Tesla. I do, though, expect there to be broader market pressures. And those pressures, well, they're going to hurt Tesla as well. But I do think Tesla probably bounces between 310 and 325. These are the lines I've had drawn on this chart for months now, okay? And these look like significant levels of what could be resistance. Okay, the last time we were here was really coming after the election when Tesla started to gap up. This is when you first seen the big volume spike after the election, and there was a lot of people getting into positions at this point. So 310, 325 or so, that's the area I'm targeting for a bounce. And I do think it could be one of those situations where even the S&P could trade sideways and Tesla could bounce from here because Tesla's sell-off was far overdone. Yun on X, he is a senior staff engineer at Tesla AI, says Tesla employees are the most loving people. If you attack them, then you are an idiot, which pretty perfectly sums it up in my opinion. Secretary Treasury Scott Bessent said on CBS today, quote, what I find interesting is for the past year and a half, most of the media said, quote, oh, the economy is great. Now that President Trump is in office, there's an economic problem. And it took 4 years to get us here. President Trump's been in office 5 weeks. Interest rates, the 10-year bond, have been down every week since President Trump took office. Mortgage rates have been down every week. Scott Bessent also says in this interview here that he is focused every day on bringing down the 10-year Treasury yield. Unfortunately, you may need some economic pain to do that. I described what we're kind of going through on X as an alcoholic that is dependent on alcohol, that needs it every day to function normally. That is almost a perfect analogy of the economy, of Doge, cutting back government spending, and kind of how the economy is right now. It's like you're an alcoholic, you have a problem, long term, that's not going to end good. Well, you quit alcohol, you go through withdrawal. That's Doge, cutting off the spigot of government spending. And overall, government spending coming down, laying people off. It's brutal. It's miserable for a period. On the other side, you come out much better. That's how I see this. Question is, how long does it take in this hypothetical withdrawal from stimulus? Government spending is stimulative. We've ran the highest deficits in the United States' entire history at a time in which we're not in a major conflict. It's never happened before. The stimulus has been unprecedented. It's starting to be pulled back. You're going to have some economic withdrawals from that. Growth is going to continue to weaken. The labor market will continue to weaken. Question is the stock market going to react negatively to that? And I think one of the big caveats here is the Fed, because the Fed is really not in a position to be able to accommodate markets because there's this tariff uncertainty, and tariffs also work into this as well. I mean, as Fundstrat's Tom Lee said over this weekend, like, we're expecting Mexico and Canada to go into a recession if we put a 25% tariff on them, but it's actually going to put us into a recession as well. Like, it's not going to be good for anyone. Tom Lee talking about the U.S. going into recession is a pretty rare thing. And even he's concerned about tariffs putting the U.S. into a recession because it is a demand destructive force. It is a deflationary force, not an inflationary force. And I would argue a lot of it would be because companies are going to lay people off if they can't get around tariffs. If Nike can't get around tariffs and they have to pay a 25% tariff, you know what they're going to do? They're going to start firing people in America. And that's the bottom line to make up that margin difference, or Nike stock is going to get absolutely pummeled. It's pretty clear. And I just think you have an economic shit show brewing. And in the near term, it's going to be hard to get out of that just down 3% from all-time highs. Like, I don't think that justifies the uncertainty and the risk out there. And this upcoming week will be absolutely critical for just that. But we will talk about this more in the next video, your economic data coming out this week and why it will be so important. Now, I do really want to make this clear. Option activity from big money recently has been very bullish. Now, this is important because, as I've said on this channel many times, big money is not smarter than you. I think you know your stuff. I was told to cuss less. I feel like I don't cuss that much, but somebody told me to cuss less, so we're going to try to work on that. You know your stuff more than big money. But unfortunately, they will always have more information than you. That's just the way it is. They know people that have insider information. Why do you think Nancy Pelosi makes so much money and just happens to get into trades at the right time? You think she's smarter than you? Do you think she could have a intelligent conversation about markets and what moves them and all of these things we discuss? No. But she knows people that you will never know, unfortunately, unless you do very well and make a lot of money, in which I hope you do. Okay. So that's why I like to pay attention to where the money is going. And really every day besides Thursday of last week, like every day for weeks, you have seen very bullish option activity from big money. Now, I love the sentiment tracker here because it's just looking at the interesting flow sentiment. Trades over $100,000. So like your $200 options, put on Tesla, it doesn't show up here. Okay, so retail is kind of excluded in this. On Friday, you had 378 different trades totaling $114.05 million with a positive order value of 76%. Now on Thursday, you did have 975 different trades totaling $4.3 billion with a positive order value of 41%. That was really the only negative day that I can recall in weeks for Tesla. Now, what's also interesting is the shorts have continuously been covering on short positions. On Friday, they covered 140,000 shares. You're going to say Tesla was up like 4%. That's not a shocker, but it's been declining for really months. Okay, short interest really started to decline around December. Okay, you went from about 3% short down to 2.13% short, which for a stock like Tesla is billions and billions of dollars. Okay, millions and millions of shares that have been covered. In fact, it's about 20 million shares or so that have been covered. You fell from about 81 million shares sold short down to about 61 million shares sold short. That's a lot. I mean, what is that on a dollar amount? I mean, even just based on where Tesla stock is today, that's $5.6 billion worth of dollars that have been covered in Tesla stock since December at current share prices, let alone, 300 or 400, where a lot of these short positions were being closed out as. You're talking probably tens of billions of dollars worth of Tesla stock that is no longer sold short. That is a pretty clear indication of more medium-term sentiment around Tesla. It doesn't tell you a whole lot about what tomorrow's going to be like. The option activity does a little bit better job in that because it is short-term in nature. But the short percentage of free float falling like this is a damn good sign that hedge funds and institutions are bullish on Tesla. They do not want to bet against Tesla right now. And if they don't want to bet against Tesla right now, you probably do not want to bet against Tesla right now. Now, if we take a look at global inventory numbers for Tesla, Model Y sitting here at about 6,100, Model 3 at about 4,100, Model X at 1,800, Model S at 1,300, and the Cybertruck at about 964. So all looks good there. Continuing to fall is obviously what you want to see because Tesla is really not affected by tariffs because they manufacture vehicles in the US, they sell them in the US. So there's no need for Tesla to build up inventory. Like what GM and Ford and other companies that are going to be tariffed are doing is they're ordering a bunch right now, because what they order right now, GM and Ford, for an example, and they get from Mexico, they don't have a retroactive tariff that goes on that. So if they order a bunch now, that's less that they're going to have to pay tariffs on. And that's where some things in the economy could get a little bit weird if the tariffs do go into effect on Canada and Mexico tomorrow at midnight. Technically, Tuesday. It's going to be a weird dynamic. But nonetheless, Tesla is currently running about 4,000 different ads with Google. Tesla's Google Trends data continues to look pretty good. Cybertruck sitting down here at 14. That's, trending lower, and it is the most popular searched vehicle in the past year, but it's comparing from really high levels of search trend activity, and that's why it's falling here. It's kind of like looking at Nvidia's growth year over year. Like, it's still really good, but it's slowing down year over year because of that comparison. That's kind of what's going on with the Google Trends data here. The Model Y recently ticked up from 12, sitting now at 14. The Model 3 is at 10, the Model S is at 5, and the Model X is at 4. So these are actually pretty good numbers, considering this is not really a super hot time of the year where Tesla sells a lot of vehicles, right? This is a kind of a slow point for Tesla normally. Now, CNN's Fear and Greed Index is sitting at 20. It was at 18, and I believe it even dipped lower than that at one point. You can also see the percent of stocks trading above their 50-day moving average. Last I checked was at about 36%. It's now at 40.5%, and your AI investor sentiment survey just gave us the most bearish reading we have seen in a long time. I mean, you are as bearish now as you were during like the 2022 lows, the 08 financial crisis. People are very bearish out there, and I think that's kind of why markets rallied on Friday, because when everyone is that bearish, you normally get a reversal to the upside. Does this last though? I think that's going to be very difficult. I think we have more issues ahead than some people expect. And we'll talk about this more in the next video. So ladies and gentlemen, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.